You know, sometimes a single piece of legislation can, well, shake up pretty much everything.
Mm-hmm.
Well, just days ago, August 21st, 2025, we saw exactly that.
Yeah.
The Income Tax Act, 2025, got presidential assent.
That's right.
And look, this isn't just some minor tweak. The official wording is it's an act to consolidate and amend the law relating to income tax.
Mm-hmm.
That sounds significant.
It is significant, absolutely. What we have here isn't just, patching up old rules. It's a pretty comprehensive overhaul.
Okay.
It pulls together existing regulations, sure, but it also takes a very forward-looking stance, tries to grapple with the modern economy.
Right.
So our mission today, really, is to cut through all that dense legal language, pull out the key bits, the important insights.
Yeah, give us the shortcut.
Exactly, a shortcut to understanding what this new tax landscape actually means for you.
Perfect. Think of this as your guide, then. We're going to navigate this thing, find the surprising bits, the key facts that genuinely matter. Okay, let's unpack this. So maybe start at the beginning. When we talk income tax, who exactly is the act talking about? Who's caught in this net? And maybe more interestingly, what counts as income now? Anything new or newly clarified that might catch people off guard?
Well, the act casts a remarkably wide net right from the start. You look at the definition of an assessee.
Good.
It's basically any person or any entity, really, who owes tax or any other sum under this act.
Right. Standard enough so far.
Yeah, but it's not just those actively paying. It explicitly includes anyone who's undergoing an assessment for their income, maybe a loss, or even a refund claim.
Oh, great.
And crucially, it also covers situations where, you might be assessed for someone else's income, or if you're kind of deemed to be an assessee or an assessee in default, it's designed to be very, very broad.
That is broad. Okay.
Yeah.
But let's dig into something specific, maybe a classic area of confusion. Agricultural income.
Ah, yes. Always tricky.
For a lot of people, that's had its own unique treatment, often favorable, right?
I've heard this new act introduces some pretty significant shifts here. What's the big news?
Yeah, this is where it gets really impactful, particularly if you own land or rural property. The act now explicitly includes income from saplings or seedlings grown in a nursery.
Oh, interesting. Nurseries specifically.
Yes. For many, that might be new. Nurseries are now firmly in that tax-exempt agricultural income category, but the bigger shift, arguably, is in what it excludes.
Okay, but so?
It makes it crystal clear that income from buildings or land, even if it is farm property, is not agricultural income if it's used for non-agricultural purposes.
Like what? Give me an example.
So say you're renting out a farmhouse as an Airbnb
Yeah.
or using a barn for weddings, that kind of thing.
Right.
That rental income, now explicitly not agricultural income for tax purposes.
Wow, that is a game changer. I bet many people assumed any income from farm property counted. Exactly. The assumption was often location-based. Now you have to look very carefully at the use of the asset. It's use-dependent.
So it's not enough for land to just look like a farm. Its use, and I think you mentioned even its location, dictates its tax status now.
Precisely. And that location part is crucial. The Act gives a very specific geographical test.
Okay.
Agricultural land, for tax purposes, specifically excludes land that's within a municipality or cantonment board area with a population of 10,000 or more.
Right. Urban or near urban.
Yes, and it goes further. It also excludes land within certain aerial distances of those urban centers, and those distances vary based on the city's population. There's actually a table laying it out.
Huh. So a piece of land's tax status could literally change if a nearby city grows, even if the land use doesn't.
Potentially, yes. What looks rural today might be treated as urban for tax purposes tomorrow if the boundaries shift or populations grow. That could fundamentally alter capital gains tax implications, for instance.
That's a really specific clarification. Big impact there. Okay, shifting gears a bit. What about modern value? Things like crypto, digital items. Is the tax system keeping up?
It's definitely trying. The Act makes a real effort to address the digital world. For instance, it actually defines a non-fungible token, an NFT.
It does. How?
Well, Section 2112 defines it as such digital asset as the central government may, by notification, specify.
Ah, so it defines by saying the government will define it later.
Sort of, yes. It acknowledges the category exists, these unique digital assets on a blockchain like digital art certificates, collectibles, virtual land deeds, you name it.
Right.
And it gives the government the power to specify which ones count for tax purposes via notification.
Yeah.
So the framework is there, adaptable, the message is clear, the digital economy is very much on the tax radar.
Okay, so the Act is tightening definitions on traditional things like land, but also trying to future-proof itself for digital assets. This makes me wonder about practical stuff. What does this mean for our daily financial decisions? Health, transport, even just using cash.
Right. This is where it hits home for individuals and families. The Act offers some clear incentives, particularly around health.
Like what?
Under Section 126, you can claim deductions for health insurance premiums and also for actual medical spending.
Okay, how much?
For individuals, it's up to 50,000 rupees for yourself or your family. And this is important, another 50,000 for any parent you're supporting.
Oh, that's quite generous for parental care.
It is. It's a significant help. And for senior citizens, if they don't have health insurance, they can claim actual medical costs up to that 50,000 limit.
Okay, and HUFs? Hindu undivided families?
Yeah, HUFs get slightly different limits. Up to 25,000 for premiums for members and up to 50,000 for medical expenses for members. Plus, there's a small allowance, 5,000, for preventative health checkups baked into those overall limits.
So a clear nudge towards prioritizing health spending and insurance.
Definitely.
What about green initiatives? Electric vehicles are everywhere now. Any incentives there?
Yes, there is a deduction mentioned for interest paid on loans for buying an electric vehicle, Section 132.
Great.
However, and this is a really crucial however, this incentive is time-bound. The loan had to be sanctioned between April 1st, 2019 and March 31st, 2023.
So it's a past incentive, not a current one under this new act.
Exactly. It reflects an earlier policy push. It's not an ongoing deduction for new EV loans taken out now. Always check the dates. The fine print.
Good tip. Okay, that's important. Now, what about cash? This affects so many people, small businesses especially. Any new rules about using cash?
Oh, yes. Very significant changes here. The goal seems to be pushing towards digital and banking channels.
How so?
For businesses and professionals, any payment or total payments in a day to one person over 10,000 rupees.
Okay, 10,000.
If it's not made through specific banking or online modes like a check draft or electronic transfer, it's simply not allowed as a deduction when calculating their income.
Wow. So paying a supplier over 10K in cash means you can't deduct that cost from your taxable profit?
Correct. That expense effectively vanishes for tax purposes. And there's more.
Go on.
If you previously claimed a deduction for a liability, say you owed someone money and booked it as an expense.
Right.
And then you pay it off in a later year with cash exceeding 10,000 rupees, that payment is then treated as income in the year you pay it.
Whoa, a clawback. So you lose the deduction and it becomes income later if you pay in cash.
It's a strong disincentive, isn't it? Basically penalizing large cash payments retrospectively.
Farewell to the big cash deal for businesses then. I can see many scrambling to update payment systems. But what's the headache here for, say, a small vendor in a place with patchy internet?
That's a really important point. Beyond deductions, the Act also restricts cash repayments of loans or deposits.
Okay.
Generally, no bank, co-op, company, firm, anyone really, can repay a loan or deposit over 20,000 rupees in cash.
20,000 limit for loan repayments.
Yes. There is an exception, a higher limit of 200,000 for primary agricultural credit societies dealing with their members. But overall, the message is clear. Large cash transactions are being heavily discouraged, pushing everything towards traceable, banked transactions.
Which, as you said, could be tough for those in less digitally connected areas. A huge shift.
It forces a change in habits, definitely. The aim is traceability, reducing the black economy, but there will be practical hurdles for some.
Okay. Beyond these daily transaction shifts, the Act also seems to recognize national service contributions. Something about the Agnipath scheme.
Yes, that's right. It includes a specific provision linked directly to that national military recruitment program.
What does it do?
It states there's a nil tax liability, basically. It's tax-free on any payment from the Agniveer Corpus Fund.
Which is?
That's the fund set up for the savings and benefits of those enrolled in the Agnipath scheme. So payments from that fund to the Agniveer or their nominee are completely exempt from income tax.
So a direct financial benefit tied to that national service scheme.
Exactly, supporting that initiative through the tax code.
Okay, this deep dive is showing an Act really trying to grapple with modern times tech global issues. How is it changing the tax system itself? Assessments, disputes? Are we moving away from face-to-face interactions?
We absolutely are. This is a fundamental shift towards what's called faceless assessment. It's a major theme.
Faceless. Sounds a bit ominous.
Well, the idea, according to the Act, is to impart greater efficiency, transparency, and accountability
Oh.
by, and this is key, eliminating the interface between the income tax authority and the assessee, and also by optimizing resources through scale and specialization.
So less meeting your local tax officer.
Much less, potentially none. It's being institutionalized through things like the National Faceless Assessment Center.
Okay, and what does that do?
It basically orchestrates assessments centrally. It assigns cases anonymously to different assessment units around the country and handles all the communication electronically.
So my tax assessment could be handled by like a virtual office. No single person I deal with.
That's the concept, yes. A distributed, anonymous process.
That is quite a change in how taxpayers interact with the system.
It is. And reinforcing that, all communications under the Act, notices, summons, orders, everything, can now be done by electronic record alongside the old paper methods.
Which raises questions, doesn't it? Privacy, data security. What happens to trust when there's no human face?
Those are absolutely crucial questions. How do you maintain trust and provide assurance in a purely digital, potentially impersonal system? It's a trade-off. Efficiency versus that personal element many are used to. Big questions to watch.
Definitely. Okay, in this interconnected world, business is global. How does the Act deal with international transactions, preventing companies from shifting profits around just to avoid tax?
Right. The Act includes pretty robust mechanisms for this. It details how to determine the arm's length price in international deals, or even some specified domestic ones between related parties.
Arm's length price meaning the fair market price.
Essentially, yes. The price unrelated parties would agree to. It stops companies artificially inflating or deflating prices between their own subsidiaries in different countries to park profits where taxes are lowest. There's a specific transfer pricing officer role to enforce this.
Got it. And any broader rules against tax avoidance schemes?
Yes. Very importantly, it formalizes the General Anti-Avoidance Rule, or GAR.
GAR, okay. What does that do?
It gives the authorities power to declare an arrangement impermissible if its main purpose is just to get a tax benefit, and it lacks real commercial substance.
So if a deal looks like it only exists on paper to save tax, GAR can strike it down.
Precisely. It targets arrangements that don't have genuine economic activity behind them. It's a strong signal against purely artificial tax structures.
Makes sense. Now, we touched on digital assets like NFTs earlier. Since they're on the radar, are there new reporting requirements for them?
Absolutely. And this is quite interesting. There's an explicit mandate now for what are called reporting entities.
Like exchanges, banks.
Exactly. Financial institutions, crypto exchanges, potentially others. They must furnish information about transactions in crypto assets.
What kind of information?
The specifics will be in prescribed formats and timelines, but they have to report these transactions to the income tax authority.
So much more transparency on crypto dealings.
Definitely. It signals a clear move towards greater oversight. The government wants to track these assets properly for tax purposes, no more flying under the radar.
Right. Okay, with all these changes, faceless assessments, new asset classes, tough cash limits, things could get complicated. What happens if a taxpayer disagrees with the decision? Is there a clear path for appeals?
Yes, the Act does lay out a very clear multi-tiered structure for appeals. It's designed to provide avenues for dispute resolution.
How does it work?
Well, it typically starts with an appeal to the Joint Commissioner Appeals or the Commissioner Appeals.
Okay,
The
first level.
Right. If you're not satisfied there, you can go to the Appellate Tribunal, then potentially the High Courts, and finally the Supreme Court.
Is there a time limit?
Yes, there are specific deadlines. For example, you generally have 2 months to file that first appeal to the Joint Commissioner Appeals.
The structured process is still there, even with faceless assessments.
Exactly. The structure aims to provide checks and balances, ensuring fairness and proper application of the law, even as the administrative side becomes more digital.
Wow. Okay, that really was a deep dive into this new Income Tax Act 2025. We've covered a lot of ground from, who counts as an assessee, the surprising details on agricultural income, how digital things like NFTs are being included.
Right, and the practical deductions for health, the past EV incentive.
The really tough new rules on cash transactions, that whole faceless assessment future.
Plus the international rules like GAAR, crypto reporting, and the appeal structure. Yeah, it's a lot.
It really feels like more than just an update, doesn't it?
Oh, absolutely. It's clearly a strategic effort, a big push to modernize the whole tax framework, bringing in new types of income, new financial instruments, and definitely streamlining the administration side to cope with a digital, globalized world.
So the big picture is more transparency.